If you have not yet saved the Milestones to Wealth centralized number wherein we'll be sending content to you about market outlook or about investment opportunities, you can find it below here, and then you can save it in your WhatsApp and you can just send us a hi and we'll reach out to you. You've been in iThought for nearly a decade now, right? So I think you also mentioned that you've been interacting with clients almost on a daily basis.
Yeah.
So you would know the difference between a client who is a winning client and those who are not. And also, there are also some clients, we follow the milestone-based system, right? 2 lakhs, 5 lakhs, 10 lakhs, 50 lakhs, and a crore. So there are some clients, some investors who would reach one milestone faster than the other. So what is one common trait that they have that sets them apart?
First, I think the common trait that I've seen is that they have the willingness to reach it. They want to do it, right? It's not like it's an unachievable target for them. When we say something, it's in their, you can see their body language that, you know what, they're all game to achieve it. And we've seen it. So there was an investor who started with a 5,000 rupee SIP, reached a crore. And, you know, when we saw that trajectory, it was pure confidence. It was pure conviction that, yes, what, the direction that he is going in and what guidance that we've given him is completely right, because he believed that by himself. And he was able to reach it. 48 months is what it sort of took him to reach. And we called him, we congratulated him, saying that, you know what, you achieved a crore. And he was very humble about it. And he said, yeah, thanks to all of you. He said, yes, you're doing right. Now, 10 crores should be the target. Now we know how to achieve a crore. Next crore, next crore, next crore. 10 crores should be the target. He said, I'm all game for it. Yeah, let's, your game, we are game. That's it. Yeah. Right. Now, second is that they have done their homework very, very well, right? Whether it is seeing our content, whether it is attending our webinars, whether it is going back and working a lot with Excel sheets, making it real, right? Excel sheet, you can put any math, 30% and you'll be 1 crore now, right? That's how Excel works. But realistic numbers is what they plugged in, and that conversation itself was an extremely mature conversation to have with them, saying that, I'm here and I have these goals in my mind, and for me to achieve this particular goal, I will need this much money. So half the work from our side is done, because when we sit with someone, we educate them that once you reached a particular milestone, we can fulfill a particular goal, right? And they come to us already well prepared. So we've seen that preparation levels are extremely high. They've spent a good amount of time. And then they start itself with a higher ticket to say, I've understood the whole thing and let's go with this particular plan of yours. Right. Third thing is probably, I wouldn't say market knowledge, but I would say some amount of knowledge regarding how risk plays out. Okay, where they understand that, okay, this is a risky thing that I would not be able to basically have a self-awareness of what your risk appetite is before we make you take the risk profile test. And so when we speak to them itself, we know that when they clearly say that this won't suit me, I know that this is it, this won't suit me. So we clearly understand that they have a self-awareness of their own risk profile. So they clearly understand that the level of risk that we would be taking for them is in line with what they themselves their awareness, their own conclusions, their own observations, right? So these three things I've seen majorly as a common trait with all investors are able to achieve their milestones faster.
That's interesting. So let me just, put across something that a lot of investors ask us today, right? Especially because we take a multi-asset approach. So we have a lot of investors who think, because you said that people have observations about their own risk appetites. So people think that they are, conservative or moderate investors, or some of them think they're aggressive investors, and they might not want to take the multi-asset approach because they think debt is going to they are not conservative investors to invest in debt, or they think they are, people who can go 100% in equity, right? So what do you have to tell to them about the multi-asset approach that we take?
See, if you're an investor, then your objective is to make money. It's not that I will make money in one asset class, so I'll go only do that. Right? Sometimes the asset class goes out of favor that you do not need to buy it. You're on the lookout for opportunities to invest in and take advantage of. Right? Yeah, some opportunities do have, higher expectation of returns, but they do come with higher risk. Now, the whole game itself is for an investor to compound somewhere between 9 and 12%, where you're able to beat FD, you're able to beat inflation, your own household inflation, right? It's not RBI's number, it's household, right? What expenses your expenses are growing at, right? And then move in line with nominal GDP, right? That's basically, then you know that as an investor, you've been well positioned in every opportunity that you've got. Yeah, from book knowledge and philosophy, yeah, it is conservative because it protects you from high risk. That doesn't mean that you're not taking risk in a particular asset class. That, yes, you are taking risk, right? So that thing goes bust, all your money gone, you can't exit, then you have a Franklin-like scenario that takes place. But it's situational, but you have that scenario to take place. Peak 2010, 11, 12, peak for gold, and after that you don't make money for 3 years, 4 years in gold at all. So that is again a risk for you, right? So the whole game is to try and understand what risks does that particular category have, right? And then use it to your advantage to say that, okay, this period risk for me is completely low, so I will go and invest there. Today where we see risk to be completely low is on debt. Second comes precious metals. Third comes equity, straight in that order. But 3 years, if you would ask me 3 years back, right, I would say first risk that is the lowest is precious metals. Then comes equity, then comes debt. Now it's flip, right? Because your return expectations are changing, earnings growth estimates are changing. And so naturally one asset class then starts to become extremely attractive for you to take advantage of. And you are a long-term investor. I've heard so many investors say, I'll invest in small cap because I'm a long-term investor. Your time horizon to stay invested is long-term. That doesn't mean you have to stay invested only in that particular thing. Right? So you can have a extremely long horizon. You can have 20 years, 30 years, but opportunities are coming somewhere else. So you have that luxury of time to go here and make moderate returns or have that ultimate CAGR growth of your lifetime investor career to be 9 and 12, at best 12 to 15, great, 15 to 18, right? But that is the number that you're looking to compound at, right? So there will be some periods where you're okay to say, no, I need to compound, I need to make sure that my drawdowns are low so that I can use it to go towards high aggressive or extremely aggressive sort of opportunities when the time is right. That is why multi-asset approach. Not because you can't take it or anything of that sort. You are an investor, so opportunities evolve over a period of time.
So basically, there is no right or wrong asset. It's just about the timing, right? When you're investing in the asset class.
Matters a lot. Yeah. And valuation is the holy grail. It's cheap, expensive. From expensive to very expensive is one cut straight away. Despite there can be more money that can be made, last 10-15%, it's okay. But it's gone to expensive valuations where margin of safety is very, very low. Risk of drawdowns are very, very high. So just, I mean, you have a basket approach, you have to be more cognizant of, if the whole basket is becoming very expensive, then you should close the door and move out.
I agree. So we've come to the end of the conversation, and then I just have one question for those of whom who have not started investing through Milestones2Wealth. So there are so many investment managers out there, right? People who are managing portfolios for their clients. So what sets Milestones2Wealth apart? Why should people come and invest through Milestones2Wealth program?
See, I'll give you a story here. You know, when you meet hard workers, I would say hard workers, gig workers, whoever it may be on that particular category, right? They are doing multiple jobs, right? And when they do multiple jobs, one, their health will take a toll. So naturally, there's no level of protection there itself. So when we talk about financialization of Indian households, right, we go from bank FDs all the way up now to stocks, right? But that in the middle where you have insurance and when you have this emergency reserve sort of financial planning that comes into play, we've seen that there's a lot of mis-selling. There's wrong products that are being given to people. And if we have to be that nation that crosses $3,000 per capita, if on a broad space, plus maintain that 6.5-7% growth, if we have to become a $10 trillion economy, then we need to have a proper hold of our financial household balance sheet, right? And balance sheets are in terrible conditions, right? If you see, they will have 2 loans, and they will have the most expensive auto loan that is being given to them because they do not have a solid credit score. So upliftment of society is what our whole goal was, that no, they should be able to achieve goals. So when we started it was making small investors think big. right? And there was an overwhelming response for this, right? Where I want to achieve the first milestone of 2 lakhs, then we bring them to 5 and then 10 and then 15. Then people started asking us and telling us, yeah, why are you doing this as small investors? I also want help. I might not be of the same status, but I still need help, right? I still want to achieve milestone. I still want my goals to be met. So then we started thinking on those lines of making every investor think big. So then this milestone base started to broaden, where we said not just 50 will make you reach 1 crore. So anybody between 25 to 50, we said no, your target is 1 crore. So our whole conversation that happens with them is majorly on their financial household, whether you have insurance, whether you have the right kind of insurance, whether you have term, whether you're well covered, underinsured or overinsured. Then you have emergency reserve. Make sure that you have at least 6 to 8 months. We make sure based on your expenses, not just it's a template, right? So that's how we evolved from making small investors to think big to making every investor think big. So now it's not 1 crore. Now we have $1 million milestone, right? Where we say 8.5 is that, but I'll say 10 crore. That we make you reach 10 crore. From 1 crore to 10 crore, simply because for every milestone that you have to achieve, the game is completely different. Your level of understanding, your maturity as a saver in India definitely is different, right? Your ability to take risk also evolves over the same period of time as you achieve higher and higher milestones, right? So that was the whole purpose, that every investor should, once they reach their particular milestone, should be able to achieve the goal that they desired, whether it is house, whether it is education, whether it is travel, anything it may be. But a more tailor-made, goal-based solution where you are pushed to achieve a particular milestone is the DNA of this program. In office itself, we've made sure that everybody has a milestone, right? So who's taking the video also today is on the milestone program, right? So that's how deep we wanted it to go.
I completely agree. See, this is the kind of conversations that we've been having with our clients. And as you said, we have everybody in office who have been, put into training or who have been made aware of why they need to invest. Irrespective of how small or big the client is, right? The process and everything that we deliver has been the same. And the idea has been to ensure that people are saving up to their investment potential and they're able to reach their goals, in the right way. And to avoid all of that mis-selling that's happening, because we hear conversations from our clients, right, about how they've been missold ULIPs, they've been sold NFOs, right, which is not basically doing any help for them. Rather, it's making money for the people who's selling it.
NRIs is a different game itself.
Yeah, I think that sums it all up, But anyways, I think we've come to the end of this, Harshal. Thank you so much.
I had so much fun. I think we should do this a lot more.
Yeah, we'll do it.
We'll
do like a part 2 or part 3 of this sometime sooner with more questions that we get from our investors. And if you have any questions, you can feel free to comment.
Preferably when the markets are down. And after that, when we have a lot more conversations, and then we'll probably have one more round of conversation together.
Absolutely. We should do this again. So we've come to the end of the conversation. And if you found it helpful, do share it with your friends. And if you haven't joined the Milestones2Wealth program yet, it's simple. You just have to fill out the form in the description below and we'll get in touch with you.